let's move on to Robinhood. So they are up over 10% today, mainly due because the SEC eliminated the partner day trader rule. Now,
Yeah.
I don't know about you. I was not familiar with this rule at all until today, but I did a bit of a deep dive. I'm not going to claim I'm an expert,
Yeah.
but I can give like a brief rundown on what the
Yeah, go
rule
for
is.
it. Go for it. It's good. I
So,
happen to know about it, but because a friend ran into it, and I was like, "What is that?"
oh,
Like, but that's
that's
interesting.
funny. Okay.
Go ahead and say what it
So
is.
basically, it was introduced in 2001 uh, to create some protections after the dot-com bubble. And the rule basically is if you have less than $25,000 in your account, you could only make 3 day trades every 5 business days. Okay. And a day trade is you went into a position and you exited the position on the same day. So if you went into a position on Monday and you left the position or you went out of the position on Tuesday, that's a swing trade that doesn't count towards that 3 day trade quota. So it's somewhat difficult to hit if you are a long-term investor or if you're just like a, average kind of secondary investor. But if you're a day trader, you're going to hit this very, very quickly. Um, so
So
the
what
SEC,
happens after the limit?
oh, so the brokerage will block you from making, from selling another stock that you bought that day. So it will still let you sell stocks that you owned uh, for longer. It will let you buy new stocks, but it will not let you sell a stock that you just bought. You would have to wait.
But if you did, I thought it would just consider you a day trader, and then there's like other consequences that happen. Is that not the case?
No, so
Okay,
for
then
the
maybe I understood it
well,
maybe
yeah,
incorrectly.
there is a different piece which I think is separate from this, where like brokerages will identify if you're a day trader or if you're not a day trader, and there are like different wash sale rules. This is specifically to put protections, or some people would say handcuffs, on investors and limit what they can do. So
Right.
this was if you have less than $25,000 in your account and you do 3 day trades within 5 business days, it will prevent you from doing a fourth day trade.
That seems pretty like that seems bad. Like the road to hell is paved with good intentions. That seems
Yeah.
like one of those type of rules. But the rule has been removed.
So it's been removed. It goes into effect technically in 45 days. When I was talking to Gemini about it, it was saying there are several brokerages like Webull and Robinhood potentially that kind of already saw this coming and have this ready to go, and they might release it sooner. I don't know the legality of that, but all brokerages have to support this new rule within 18 months. So it does give the slower
Gotcha.
moving brokerages a bit of time to update their systems.
Okay, so this random rule, all of a sudden, the market decided that Robinhood should be worth 10% more today than it was worth yesterday.
Yes.
That just seems kind of crazy. It's like an $8 billion swing on the market cap of a company that has a total of run rate of like $5 billion revenue run rate. It just became worth $8 billion more. So that's how ridiculous the market is, right? Like on this seemingly random news that might affect Robinhood's revenues by a couple percentage points, maybe. That's probably generous. Um, the market decided that, oh yeah, today Robinhood is worth $8 billion more than yesterday. So that's probably 3,000 years worth of sales that might be affected by this rule. So, uh, sometimes the market is like clinging for either bad news or good news to make price adjustments that should have already happened uh, on a given stock. And this is exactly why I don't try to time these things, right? Like I have no idea when it might make that decision about Rivian or about Micron or about Bumble or whatever.
Right.
So it's
Yeah.
it's
I
fascinating.
I was very close to selling some Robinhood today because I
Oh
think,
oh yeah, because of this.
yeah, because it definitely is positive for their business. I just don't think it's 10% increase, positive.
Right.
Um, Going back to the rule itself, like, and you already mentioned, like, it's such a silly rule. It's also just completely arbitrary for two
Oh
reasons.
yeah.
You have the 25K limit, which is
Right. So
totally
it only
arbitrary.
hurts smaller accounts as opposed to
Correct.
larger accounts.
Correct. Or you could have a large net worth and you just have your money dispersed um, between multiple accounts, and then you can't day trade. You
Right.
have to consolidate into one brokerage. And then the other arbitrary piece is that you're limited to the 3 day trades in the 5 days. Like, I don't feel like there was any thought put behind any of this, especially like the 25K limit. If you have $24,999
Right.
versus $25,000, like, you have
Yeah.
completely different rules. So just thought it was very poorly implemented.
It is welcome to politicians trying to sort of like t- set up rules for probably again with good intentions, but just they don't understand the details sometimes well enough to make good judgment calls, which is why I'm more of the side that like industry needs to either be involved, which seems kind of bad because oftentimes industry is trying to manipulate the laws in their favor. Um, but like without some industry help, it's kind of they're taking shots in the dark essentially.